Friday, August 15th. The process of this show is going to be any reaction is an overreaction. Nick right now in the live YouTube chats asked me, is that for my lady friend as well? When we're in the heat of war, and we're debating what the poly market, 0 means no reaction, 10 means reaction. The poly market would probably be towards 10. If you're in the heat of battle with, your significant other and you say, hey, honey, any reaction is an overreaction. Yeah, you're going to get an overreaction back. So just realize that. I got a lot to go over. We got all the 13 Fs. There was a big trade yesterday that I made. Huge trade. Just shut up and buy. I'll tell you about it. I'll tell you about everything. But I want to start out with the market didn't care about PPI. It didn't care about PPI. We're going to go in and we're going to look at a 5-minute chart with the after hours. You can see the dip down here in QQQ. So you can see it here in the Qs. This is a 5-minute chart. The lighter shade is after hours. You can see this was when PPI came out and we thought, oh, the market's dead. The market came right back when it opened up. It's a buy the dip market. Any reaction is an overreaction. Everybody is buying the dip. So I want to point out some stocks, okay? The first one, COMM. I want to point this out. COMM. When this moves to strong buy, okay, we'll go and look at the quant. There's going to be a theme here, okay? This moved to a strong buy down here at $3.64. Where's it trading today? $15. And that's not like a long time ago. That's April. Okay? This is still a strong buy in the quant. So we can go over and we can look at it in the 4-hour algorithm. Let's just COMM. And let's look at this one. Boy, this one, great. 143% gain. And you've got a gap. Are you going to fill that gap? Well, maybe. But again, any reaction is an overreaction. Let's look at another one. Micron. This just moved to strong buy, by the way. Back here at 122, you're only trading at 125. Let's look at the 4-hour algorithm. Did it get you in? MU, right there. Let's look. Boy, it got you in here at 108. You'd be up 17% right now in just a few days. Just a few days. If you had bought on the 4-hour algorithm, assuming this went to strong buy, it went back here 7-11. Let's see. When did the 4-hour algorithm get you in? August 5th. If you had 7-11 back here and you said, ooh, it moved to a strong buy. Should I get into this? Well, the 4-hour algorithm had you in, but it was close to getting you out. If you understood the formula, you probably wouldn't have gotten in. Now let's look at another one. BTG. Is this one? That is a good one. This is a strong buy. Okay, let's look at when it moved to the quant. The strong buy in the quant, it was way down here at 290. You're at 383 today. Let's look at BTG. BTG, right there. This moved to strong buy at $3. How does it do in the 4-hour algorithm? It does pretty good. It beats buy and hold. And it moved, you got in at 348. You're at 384 right now. Again, any reaction in the market is an overreaction, but I trust this quant. And what do I use? I use the quant. Now let's look at this, because what this is the blue line is the top quant rating. That's a strong buy. We're going back 5 years to 2020. The orange line, seeking alpha analysts. And then the black line is the S&P. This is why I trust Seeking Alpha. Okay, there are 3 main things why I trust Seeking Alpha. The first, back-tested performance. It's shown it. I just showed you the chart. 2, time savings. I can take a look at a stock in 5 minutes and determine, oh, is it quality or not? And then I can go further if I need to. And number 3, the AI analyst report. Okay, between the screeners, the quant rating, and the analyst reports, just look at that performance. My point is, using these tools, I can put some smaller plays in and have them as training tools, or you can use paper money if you'd like, whatever you want, but find a process that works for you. And I've got my process. I just had a few people tell me, thank God, You've been pumping Seeking Alpha. The reason is because they just signed up. You go to Linktree, okay? I always suggest this, the bundle. The bundle saves you the most money, okay? Because if you just bought them separately, premium and alpha picks, you're spending close to $800. This brings it down closer to $600. It's a saving of almost $160. But if you want them separately, again, I just went over the features of Seeking Alpha Premium, and you get a free 7-day trial. That's over on Linktree as well. Right here, the third link. And that's a great, again, screeners, AI analyst report, the quant, it's all there. You can import your portfolio and do a health check on it. Free 7-day trial. And then you've got alpha picks. And we went over this. This is an old number. It's over 200% now. But it just beats the S&P. We're going to get a new pick at noon today. Remember the rules for trading the picks. And if you don't know the rules, go to the recent post. Okay, go down to the first, August 1st, right here. And the rules are right there. The rules are down here for scalping. You can go in there and you can find the rules. Go ahead and do it. It's at the newsletter, but we will get a new alpha pick today. So let's start talking about the market. Yesterday, what happened with the market? Well, Intel, 3:41 p.m. Someone bought 1,500 contracts of Intel, okay? Calls expiring tomorrow for 5 cents each. 3:43, news emerged that the Trump administration was considering a deal with Intel. The stock is now trading 10% higher in the news. That same call set up tomorrow, more than 1,000% higher. 1,000% higher. And that's just on news that Intel, INTC is the symbol. Intel was going to potentially be taken over by the Trump administration, or the Trump administration was going to put some money into it. Again, these things are moving. I had pointed out, Daniel had mentioned this. He brought this up on Tuesday. I published it for you. So if you were listening to this, you could have been in this play, because I said, hey, 4-hour algorithm has you in here at 20, and it greatly beats buy and hold. 26% over the last 2 years versus 35%. You may say, well, how do I get that 4-hour algorithm? It's the top link on Linktree. And TRENDSPIDER, you can get it for just over $50 a month. But again, Intel right here, the play was out there. Is it still a good play? That's up to you. Is the risk worth the reward? The biggest movers today? United Health, we'll go over that one. NU Holdings, I'll just say, it's a Brazilian bank or a Latin America bank. I like it, don't love it, but it's been a winner. Applied Materials, we'll go over that one, because is it an overreaction? In biogenomics, again, the company posted a loss. In this market, if you post a loss or guide lower, it's going to be bad. Now, David Tepper buys, sells, features Intel. He bought a bunch of Intel. He is in that pop, okay? United Airlines, Delta Airlines, he bought all that, boosted its holding in United Health. On the other hand, the firm closed out its Win and Broadcom. So they sold out of Broadcom. Broadcom is at an all-time high. They sold out of it. They decreased their position in BABA. Here's what you have to know about this. All of these 13F filings, the Saudi Arabia Sovereign Fund, Tiger Global, Soros Capital, Bridgewater Associates, David Einhorn, and Bill Ackman, all of that is in the news, and you're going to see it. This is like your favorite NFL team. Pick your team. Again, pick your team. Do you like the Cowboys? Because nobody does. They're called America's team, but nobody likes the Cowboys. Bill Ackman's the Cowboys. Nobody likes Bill Ackman. Nobody likes the. If you've read a Bill Ackman tweet, you officially have read the longest book in 2025, because those tweets are just, it's ridiculous. I've read none of them. And Lone Pine, again, same thing. Now, most will focus on big ones. I particularly liked this one. One of the best hedge funds in the world, Renaissance Technologies, bought $422 million of UNH. For what it's worth, Renaissance has averaged 39% CAGR since 1988. Other noteworthy buys: Snowflake, C Limited, Boeing, QBTS, Riot, Sezzle. They bought Sezzle. I've gone over Sezzle. Is it one that you like? Again, risk reward. So one quick tip. Go and ask AI to summarize this weekend the 13F filings from the largest hedge funds. Go and have a conversation. That's your homework. Seeking Alpha has all the articles. I will post all the ones that I posted that I just went over. I will post them in the newsletter. They'll be there free for you to read. But if you don't have a subscription to Seeking Alpha, just go to AI. Check it out. It's super, super simple. And one thing I want to point out, what if Bitcoin was the new gold? This is the market cap of Bitcoin. It's $2.4 trillion. Gold market cap is $22.8 trillion. That's 10 times. Do you have exposure to it? Maybe, maybe not. This shocked me. I bought more IBIT. Okay? Now, one that is great, TeraWulf. This is a power company and a data center company. They announced yesterday that they were getting, early in the day, it was revealed Google took an 8% stake. TeraWulf was up 59%. It's AI power. Do you want to get into this one? This is Wolf, WULF is the symbol. You can see 4-hour algorithm had you in here at $5.50. 4-hour algorithm doesn't beat buy and hold. Buy and hold beats it by a lot. By a lot. We had a gap up here right at the 561. So if you bought at that 550, you were great. You were probably looking to fill this gap on an upward trending with a golden cross. And so again, you were moving in this direction. It was positive. If we look at a weekly chart, you're just at the 200-day. You just broke through it. Where do you have the top right now? $40. Again, risk reward. Is this in your purview? Because I'll tell you, for paid subscribers, if you go and look in this section, beat the S&P, my 2025 portfolio, plus one renewable, I will have an article at the end of the newsletter, not at the podcast. The newsletter will say it. So paid members, go to the newsletter. Okay, I showed you on Wednesday this particular company. The article that posted today on that particular stock, the CEO saying, "Hey, we're going to announce buys." Boy, look at this. This was an announcement. Look at what it did for that. It's getting to a nice point. So I'll give you my ideas. Okay, they are building data centers with power. That's what Wolf did. So when you see articles like this, big tech's data center boom is said to spark fears about power bills. That's not a bad thing. It's not a bad thing. No local government is turning down a data center construction project because of power concerns. No local government is going to do that. Yes, it's going to cause problems with the locals, but they're going to work through it. You know why? Construction jobs, TikTok, again, all of this stuff is going to be figured out. But you want to be in the space that actually makes the money. And part of that is the power. Utilities warn the billions needed for power plants and transmission lines may raise rates for households and small businesses. And yes, your commissioners in your cities and your states, they are going to be controlling those utilities. Vote the people in that you think are likely to do what you want. And if it's keeping your power bill down or letting people build nilly-willy, that's your choice. But again, don't let these articles get you out of the power. The power realm is where it's at, because even if they pull back on chips, power is going to be important. Now let's talk about Oracle. I really love Oracle. The more I see what's going on with their cloud business and operations, their strategies with Stargate, and don't forget, TikTok needs a home. So let's look at Oracle's chart. It is a monster. The 4-hour algorithm just got you out. The 4-hour algorithm slightly beats, 129% versus 112%. If you bought and held this one, you are doing just fine. Is it expensive? Yes, absolutely. Oracle is a hold in the quant. Was it a strong buy? No, it's been a hold. Why? Because the valuation has been an issue a long time. The growth has been an issue the long time, but its momentum is phenomenal. So I like that. Any reaction is an overreaction. And so now I'm going to go and look at a couple of things. Because UNH, we can just type in UNH here. UNH over 5 days is up 11%. Okay, I wrote this before the 13F filing. Guess what? They're buying the dip on this one. They are buying the dip. The big hedge funds, they are buying the dip. So the big ones bought the dip. And FYI, Warren Buffett bought the dip last night. So I did too. Literally, here's what I did. I put it out there for the paid subscribers. It was 4 p.m., 4:05 came around, and the news came around that Warren Buffett had put money into United Health. Now, what I should have done was UNG, which is a double leveraged ETF on this one. Let me just get to a 5-minute chart because you're going to see it right there. I got it at 280. You're trading at 301 right now. This is a time where I said, you know what? I know the value. I know it's trading at a very low PE. I know historically it has been higher. I know that there's going to be a lot of news around this buy. So I bought $50,000 worth of it. I just put it in there and I just bought it. I'm doing fine now. I've lost confirmation, but I have a feeling this one will trade over 300. My guidance to anybody who didn't get in, if you do want to get in while it's under 300, okay? We are probably going back to this just over 350 bucks. I mean, that, again, 315, if I were to put a line in here and I were to look at the most recent, look at where that line's going to be. It's probably going to be 315. And I can take some nice profits and always buy back in because remember, even though Buffett bought into this, it's still cheap. It's still got a DOJ investigation and it's still problematic with management. So it's not perfect. It's not like I'm going to just go out and buy this. And we can go and look at Lilly because Lilly, over a 5-day period, you're up 7%. And in pre-market, it's up another 1%. Again, is this reaction an overreaction? Well, if we go and look at Lilly, does it trade well on the 4-hour algorithm? Yes. And when did it get you in? At 675. You're trading at 684. You've got a nice gap up here that you've already entered to 739. So again, you have to know what's out there. And one that I found yesterday that I think is interesting is Cohort, C-O-H-R. I think that's what it is an outstanding This is Daniel, who I respect tremendously. Okay? It's an outstanding AI power play if you're looking up and down the supply chain of companies like NVIDIA, Oracle, Microsoft, and others. Strong execution in the business and has its margins, earnings per share, and revenue rising. This is also because of one of the engines of moving data for AI. Tidy quarter and a company worth looking at outside the typical AI names of build-outs. So let's go and look at it. COHR. It dipped big. It was down 20% yesterday. It's a buy in the quant. Okay. It's Wall Street price target. Wall Street price target is $111, 21% upside where it's trading right now. Has it gotten there in the 52 weeks? It got up to 123. So you're right in the middle here. Maybe this one deserves a little bit of look. So the COHT. What's the symbol? COHR. Why am I doing this? COHR. 4-hour algorithm just got you out. I would argue with good fundamentals, this one may continue its route up. Okay, you're right at the 50-day. The last time you were close to the 50-day, you dipped under this and you dipped under it here in April. So maybe under $86 is your buy point. Again, risk reward. It's gotten some good news from Daniel. This is a great write-up on this one. Had a great quarter, double beat a year, but is getting hammered on cautious guide, which was complicated by a divestiture of its defense laser business, which impacted the guide by $20 million. Again, you have to know what you're buying. This one deserves to be on the watch list. So I'm going to put it on the daily stock pick watch list. I like it. I want to know when it's going to give me a buy again. It doesn't trade great in the 4-hour algorithm. It makes you almost 50%, whereas buy and hold makes you 75%. And again, with respected names that I like, I want to know exactly what's in this name. And so I'm going to give you a long form one. Cohort, the silent giant powering AI and advanced manufacturing. You can read all about it. This is a free Substack newsletter. Go and read about it. I did. I like it. I like it. Now, is HIMS an overreaction? Is this an overreaction because it's down to $46? Is this an overreaction? Remember, UNH is under investigation as well. Is HIMS one? Well, 4-hour algorithm has you out right now. Are you going to get back in because it trades okay? I'm okay making 189% on a volatile name like this. You're right down at your 200-day. Last time you were at the 200-day, it was 44. You went all the way up to 63. We've seen it at 63 multiple times. Is it simply a short squeeze? Well, maybe the quant has it as a hold. It's very expensive. Go and read the analyst reports on it. Now, yesterday, what happened? The trade desk, which we've seen multiple times. And I said, hey, this one going to fill this gap all the way up here to 120. I was wrong. It pulled back hard. It created another gap all the way up to 86. What we saw in the morning was this headline: Walmart amends ad tech agreement with the trade desk, which is their largest partner, which might benefit Amazon. Remember, Amazon is said to be kind of stealing trade desks, some of their customers. This would not be good. And so the trade desk was down 6% again yesterday. 4-hour algorithm hasn't got you in. It had you out right after that drop. Okay, 4-hour algorithm beats buy and hold. It wins 55% of the time. So you're at least doing better than, you're winning a few times. But the wins are only 9%. The average loss is 12%. It just doesn't get you out early enough. So you want to find a strategy to trade this if you're going to trade this, because today, what do we see? Trade Desk says Walmart fully committed to ad tech agreement. They basically go out and they say, hey, that comment is completely wrong. In fact, the senior VP of retail media for Walmart said in June, we are all in on Trade Desk. That's what they put in their press release. So remember, reaction may be an overreaction. Now, this reaction is huge. This was down almost 20%. Applied Materials had their earnings, Q4 revenue decline, China uncertainty, and leading edge lot. They just guided. When you miss, you're going to get killed. So AMAT is getting killed in pre-market. It's going down to 162 right now. 162 in pre-market. Where does that put it? Below its 200-day. The last time it used the 200-day as resistance, you're going to start to see this one fall. Is it a good opportunity? Well, maybe, because at 162, you're just above that 200-day. So maybe this one is actually a good one. But you have to know they guided down. Now, Open Door, which has no news, is this an opportunity? Is this an overreaction? Because we saw yesterday, this one was up 30% yesterday. And we're just going to go to a 5-minute chart. Could you trade this on a confirmation? And I've said this before. Yes, yesterday's open had you at $2.40. The confirmation went all the way to $2.91. You lost confirmation, but you gained it back. And right now you do have confirmation. We're at 921. Would I expect this one to gain confirmation even in the open? I would be trading it. I would have an alert set. So congrats to the influencers that got in a few days ago when it was flatlining at $2.40 because you've almost doubled your freaking money. Again, is any reaction or an overreaction? And here, this is a great article. These consumer finance stocks are flashing the biggest bull signs, and you can import the screener right here into your Seeking Alpha setup. So if you want to investigate these, go and investigate them. Now, I want to point out what type of market we're in. This is a scene from Silicon Valley where they go over, why would you go out over revenue? And part of the reason that you're seeing this is because, again, I've got to get off that because they're going to do some kind of copyright claim on me. But watch that little video. Silicon Valley, one of my favorite shows of all time. And it's clear we're in that kind of market. This is the market we're in, but realize it changes quick. If you have a risk tolerance, that's your thinking. The thinking in that clip is exactly what you should be thinking. Why does this company want revenue? Because when you start looking at revenue, it actually reduces your share price. So they're not looking at revenue. You don't want revenue. You want users. You want to grow, because once you put a revenue out there, I was like this in my 20s, 30s, and 40s. That was my theory. That was my thinking. I was risk tolerant. Here in my 50s, I'm a little less tolerant of that. So I am underperforming the market right now. My biggest risk reward right now is Apple. I love it, and I'm sticking with it. But if you are risky in this market, you can absolutely do a killing. And my final one to leave you guys with, it's Android people. These are Android people. And yeah, he picks on the Android people. So paid members, remember at the end of this newsletter, you've got a play on that power one that I went over. But if you have any questions, it's all on Linktree, okay? Everything's on Linktree. You got TRENDSPIDER, you got Seeking Alpha, you got the bundle. We have an alpha pick at noon today. Go to the website, go to Alpha Picks, and just start refreshing, and then start scalping. Because if it's a small enough market cap, you can typically make 10% with everybody looking to buy. So if you have any questions, hit me up. Again, on Linktree, I've got my email address and everything up there. Have a great weekend. Enjoy yourselves. I'll talk to you Monday. Say bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.